following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a good Wednesday morning. And today's the day I get to talk to Tom O'Brien on his show. It's an exciting day. It's always an exciting day every Wednesday, for me at least. And how you doing, John, from Philadelphia? Good to have you, as usual. Did you guys catch the cruise beats last night? I hope so. Man, the guy's a fighter. Got to give him that. Might not be well liked, but I tell you what, can't say he's not a fighter. Let's take a look at, even though some of the quotes from some of the other senators were, if he got murdered on the Senate floor, nobody'd really call the EMTs, or however they coined it. Looking at the S&Ps, let's take a look at it in the scanner first, because we started drifting into this kind of mixed up territory. Middle ground got a little high. Not a lot of direction yet on the daily, but we've obviously had some disturbances here on the shorter terms, being able to kind of understand where the tide of the marketplace is relative to profiles are on some shorter term time frames. But the bigger thing to really keep in mind here, as that is kind of the overhanging leverage, a lot of times when you've got a mixed bag, you've gotten down below and really retested some of these levels that we've been looking at here. Now, I'm going to go and just kind of focus on this 2059, 2060 area. No, I didn't hear Hillary's speech. Why would I listen to hear Hillary make a speech? Okay, so taking a look at this level, you see the cell structure here. This. A lot of times when you have a peel back in the gray area on the scanner, in this case the weekly, that usually means we're going to have an inside profile. A lot of times that'll mean that. So long term, that usually, we'll get into that in a second, but let's focus first of all, before I lose my train of thought again and take a left turn into some other conversation, which I'm kind of famous for. 2060, we're going to take a look at that. Starting to see some red cell structure. Here's a 29 with the arrow down on the 60. I just want to kind of review what that means. Here's our daily situation. There's that lid 2060. We kind of closed below yesterday. We kind of went back and retested today. 2060 was the high today. The close yesterday was 2057. So we're obviously trading about 12, 13 points lower at this stage. But let's look at the 60. A lot of times, especially if you go back into the 29th here, you have this yellow peel back happening, which, again, doing a little history lesson, looking at my chart, if everybody can see my chart, I hope so. When you have these moves and you've got leverage in your favor going one way, when you see these, this is a short-term, we don't ever even talk about the 60-minute. I just want to kind of prove a point here. These are indications to start taking some weight off. And if you can see, a lot of times we'll explore the entire fair auction after these indications happen. These are in the scanner. I'm going to point it out right here. So if you're trading on a short-term basis or a long-term basis, you've got to be aware when these yellow peelbacks happen. And what you can do to completely get out in left field before we go back to the S&Ps is I'm going to click on new box here. And what this really does in a really cool way is completely on the intermediate time frames, gives you a chance to understand where there are some instruments emitting this type of field. I've been watching Ancient Aliens a lot, so I'm going to kind of use their terminology here. emitting this yellow peel back. So as we look at, a couple of these things, Apple, let's take a look at Apple. Then when I promise we're going to go back to the S&Ps on the daily on Apple, let's click in the wrong button. Let's look at the daily here. So what started happening yesterday, and this is as of the close of yesterday, so we're more than likely going to get, and I'm going to point this out to you, and I promise we're going to come back to the S&Ps, and we are going to hit coffee. Somebody asked about that. So as we look at Apple, this is yesterday's closing yellow peel back situation, all right? Now, during the day, you started seeing this happen in the scanner. I was watching it when it happened. So that means that the short trade might be over for a little while. You might have a higher resistance level with a new unfair high on a new profile that comes out to bang this thing again on the short side, all right? Because, why? Because on our long-term weekly on Apple, we haven't really had any indications that the technical breakdown, I was hoping, just praying that this thing would retrace back up to 99.80 kind of after it sold off that day. It only got as high as, I think, 98 and some change. But, that failed. So now you don't have any real indications yet that the long-term trend, the breakdown, there's any mitigating circumstances to cause you to feel any different there. So when this starts happening, you're like, okay, wow, intermediate trade, I should start taking some weight off. I should, based on that weekly we just looked at, I should start looking for higher levels to sell on a profile that may, that will appear today in Apple, right? Because this is yesterday's information, and this is what the scanner has on the weekly and daily. So, and if we get a profile appearing higher than this price action, which you will know today, completely higher, then you're licking your lips, you're looking at the bottom of the profile, and that's where you're going to play defense against a new short. Thanks very much. You've been great. Actually, that's the way to look at Apple right now. And we're looking at that in conjunction with what's going on with the broad indices also. So let's go back to the S&Ps and let's finish our original thought here. And as we look at this, and look at the S&Ps, and we talked about this 2060 area, you got the breadth not exactly, caving in here. So be aware that you don't have a lot of concert going on yet. You need to let the market open now. You're kind of, below areas. The short-term resistance now is 2050. The long-term, the intermediate term is 2060, 2059. And we don't have any, yellow peelbacks happening on this bar. You don't have it in the scanner. You've got it on the weekly. But what does that mean when we have a yellow peelback happening on the weekly when we're within a profile? We're going to go back to that, and then we're going to just kind of finalize the assessment on the S&Ps. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And before we make a complete final assessment on the S&Ps and give maybe the buys today and where this thing's headed, we always want to surf around, look at the relativity type instruments. The NASDAQ, the DAX, talked about 10,000 being the lid on that for a while on the upside. The no trade, which has been completely non-eventful and, in my opinion, easy to put on from the long side, only blocking out the short side relative to everything else that's going on. And also, we're going to take a look at gold and the dollar a little bit before we make these assessments. But also, I want to mention that, Andy Hecht's doing this first part in I think it's a 4-part series from May 4th to June 15th, spaced out every 2 weeks. So you got May 4th, May 18th, June 1st, June 15th. He's starting tonight, 5:30 today, so 2-hour session tonight. Make sure you get signed up for that. If you've always wanted to know all these little innuendos that Larry talks about, Andy talks about, backwardation, all the things in the Commitment of Traders report, all types of things related to commodities, he's going to be hitting them all. And demographics, derivatives, overview of market structure, things like that. Get signed up if you haven't really gotten your head around some of the commodity terms and some of the ways that you could look at commodity markets a little differently possibly than you're looking at them now. He's going to cover everything humanly possible. You're welcome, Andy. So as we look at the NASDAQ, then, the NASDAQ, and this is the daily on the NASDAQ. NASDAQ, as Joey and I were talking about, usually kind of leads the market up, leads the market down. The breakdown happened early. That was another kind of harbinger of bad news for the S&Ps. 4440 closed below, retested. This is last week, actually. Let's look at the notes really quick. Let's look at the 10-year. And this is something, we talked about, block out the short side, block out the short side. Let's buy support again. Yellen is obviously not hurting that concept. And her, what would you call this, guys? Her crew. Yellen and her crew. All right. And so as this has been possibly the easier trade, of buying notes instead of trying to sell the S&Ps, because remember, we talk about this all the time. S&Ps go up, notes seem to go sideways. S&Ps go down, notes seem to go up. Here's the support area we talked about yesterday: 129.31, 130. That general area. Still like it. I like how the notes are acting here on the long side. We're going to hit gold really quick. Excuse me. Then we're going to come back to the S&Ps. Jay, I did not eat at Ralph's. That cough is from another derivative. Here's gold. Nothing really telling you to get out of the long gold trade right now. The 240s broke down a little bit here, but I don't see a yellow peel back happening in the scanner on gold on the daily. Let me just make sure of that. We got it started in the scanner. All right, the daily on the e-signal is not showing it yet, but it will. Actually, it might be time to take some weight off of gold. I was waiting for this to happen, and it has happened. It didn't happen on the last break. So again, the crossover on the 240s, gold correction, time to take some weight off, at least some, on the gold trade. And why are we doing that? Because we're waiting for new inflection points to happen here, which will be given to you in the scanner. And the breakdown on the 240, we've gotten back above a little bit here, but that yellow peel back is pretty serious news when it comes to the daily there. The weekly, nothing's standing in the way right now. So taking some weight off the long gold trade might not be a bad idea right now. All things considered, let's go back to the S&Ps. I like blocking out the long side on this. I like short-term resistance at 2050 and longer-term resistance at 2060, that general area. So short-term traders, you've got a chance to pick a battle and any retraces back up into 2050. But if that doesn't work, you've got 2060, and it looks like we're kind of trying to make another leg down here, breaching these 240s. And let me check the den to see if there's any hate chats in here. No, thank goodness. I'm just kidding. The DAX, getting below 10,000, really big deal for this thing. Next stop down, in my opinion, 95.83. Got a big wide profile here on the weekly. This is also in the scanner. Key reversal outside of this particular profile and diving back into it. Don't see a lot of reason to get long in any big way on the DAX. And a lot of these indices globally could just settle back a little bit. Let's take a look at the globe when it comes to the heat map on the daily. All right, so this is a heat map, if you haven't watched this show before, relative to net profile breadth statistics. So profile statistics in a net breadth calculation. So as we look at this, the S&Ps, again, a lot of red on the board. A lot of things have rolled over. You guys have the scanner. You've been watching this kind of transpire for a while. I mean, the Nikkei obviously had some issues, some currency issues, which we're going to look at in a little bit on the yen, repricing itself. And as we look at the S&Ps, you're able to quickly get all these inflection points that I just spoke of. There's a 2050 trading below there. Excuse me, had a brain lock there. 2060, and then as the stocks are opening this morning, you're going to see this, by default, this daily breadth negativity get a little bit bigger. A lot of these stocks haven't opened. We're going to take a look at crude oil really quick. I don't think crude oil is the genesis of why these things are coming down here, but we're going to take a look at the XLE, and we're going to look at crude oil. There's the XLE. You kind of come down pretty hard. You're on support 65.21. And as we look at crude, we're going to look at the June contract. Crude is kind of So, looking like it's coming down into support here. 42.93 new daily profile that matches up with a POC from the former profile, and 42.93 down into 42.06. You've got a decent collection area here. I think you can play defense on the long-term trade below 42 very easily. Crude's going to bounce around the market. A lot of times, I get a lot of emails like, well, you said this, and then, the market's going to do what it's going to do. I mean, once you kind of get your head around that concept, then you're going to be able to look at this information in the scanner and the indicators to be able to use it as a roadmap to play probabilities. So we're going to talk a little bit about oil, the XLE, and a couple other things when we come back and start getting into some individual stocks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to finish up crude oil here. And Jay, don't quit the day job, please. Crude oil futures. And we talked about the XLE being at support. You've got some support here, 42.93, but again, you've got some huge support around 42.06. So, you still are looking at this blocking out the short side. That's probably the risky trade, and really trading against what's been put in place here with crude oil. if it doesn't work out, it doesn't work out. But at least you're playing the odds and the probabilities. And before we went to break, I was talking about the dark clouds hovering over trading again, which I've got a bad habit of doing. And was telling you that the markets are going to do what they're going to do. I mean, Steve Banger and I were talking about that the other day. He trades a massive amount of options. He trades option volatility plays primarily on a short-term basis, and he seems to squeeze out, print some money at least 4 out of 5 days a week. I've watched him, and it's pretty incredible what he does. He's got a lot of gadgets going on to try to measure gamma and a lot of other things. And he's obviously got cheap option rates to trade those contracts. That's the only way that works. But, we were talking, all the indicators in the world are not going to give you a lock on, hey, it's time to go long and that's the way it is. And if it doesn't work out, you should double down. We're giving you a roadmap to try to operate on the probabilities, and the way we look at it and looking at these cell structures and looking at these profile breadth statistics as we give them to you. You're not going to get these anywhere else. I'm not trying to be a salesperson, but we've tried to get leverage on where to play defense and what side of the marketplace you can hopefully block out. So that's kind of, again, the way it works for me the best, which is just kind of, I want to be buying dips and buying breakouts, or I want to be selling rallies and selling breakdowns. All right. So it's that simple. And this makes it pretty simple for me, and I'm not the brightest guy in the world, so that's very, very helpful. Let's take a look at coffee, and I'm going to put the right month up here. Let's look at the continuous contract, because we had a question about coffee early, and somebody wanted to go back 20 years and find a hole in the marketplace, and I don't know if we can go back 20 years the way I've got this set. And I guess you're considering stepping in, and I forgot who asked that question. Let me go back here. Andrew. All right. Okay, so I got to say one thing on the long term. I'm going to go back in time here. And man, coffee's gotten cheap. I guess you guys buy coffee. Man, has it gotten cheap. Good coffee, cheap. Not at Starbucks, but it's amazing. You go to Harris Teeter or Dominic's. Was that the grocery store in Chicago I used to go to? Dominic's? I can't remember. Man, you can buy a pound of coffee now for a good pound of coffee for $5. I mean, the cool coffee to okay, so I'm only going back to let's see, 2010 here, and the reason I'm not going back too far is because the farther you go back in time, unless you see these big time holes like we probably could look at on gold. These have less and less relevance the farther you go back when it comes to these profiles. So I'm going to just go ahead and tell you that right now, this is our weekly. Right now, it looks like to me, and it's kind of dived a little bit away from here, but I'd want to be a buyer of this. I like how this is kind of, there's a couple of things in play here I want to state. One of them is, you've got these, see how these profiles have kind of scaled down since 2014. You've kind of had lower highs, lower lows, lower highs, lower lows, lower. And now you've kind of got a change in tone here, finally. And you've got a profile high that's the same as the previous weekly profile high, which started around February this past year. So getting back above 122.06 would make me feel really good. I wouldn't want to be a buyer down here at 114.89 because that's usually indicative, we could do a little bit of a flush there, all right, just to get some people out, hit some stops, and then I'd like to be looking at it on a weekly close above 114.89. But and you're also kind of, if you look at our navigator here, there's another thing in play, and this isn't in the scanner, but I'm just going to talk about it. We've got a divergence in place on coffee. You reach some lower lows here on a long term, on our weekly, and you've made higher lows here on Navigator, and you're getting ready to cross above 0 on Navigator, which is the first time this has happened since December 2014. So getting back above and a weekly close above 122.06, and I know we've done that already, and we came back and retested and went higher. At that point in the past here, you were kind of looking at the daily to regulate the trade. All right, when we had that kind of yellow peel back happening in the scanner, that was like, okay, well, let's kind of take a break here. Let's take some weight off. I still like how this is acting on coffee. Getting a weekly close above 122.06 again. We're playing the probabilities. All things considered, we can play defense below 122.06 on a weekly close above. And based on some of the things we've just talked about, again, we're looking for a roadmap to try to operate, try to put some odds in our favor. I actually like this, and thanks, Andrew, for bringing that up, so everybody could call you at home if it doesn't work out that well. So you need to post your phone number, maybe your address too, and we can come by and take a .22 rifle and shoot your porch light out every once in a while if it doesn't work out. I'm just joking. This is a joke, but it's a really nice play. Getting serious again. All right. I've been listening to Donald Trump too much. You're right. All right, let's take a look at the dollar. I'm just joking, Andrew. John from Philadelphia. That was a joke. But yeah, great to put that on everybody's radar screen. Let's take a look at the dollar. Again, had a long-term trade, got to take some weight off here, got the yellow peel back. You might have a higher resistance area to hit this. The weekly, Steve Rhodes is a really good candle expert. And, I don't look at candles, but, combining some of the things he might have to say on the dollar when it comes to this and the way this candle's probably setting up, you might get a little more information there, but again, having this daily kind of regulator of the trade down on the dollar, we've got a new profile trying to appear. You got to just kind of, all right, we gave some back, but again, not staying in these trades on a long-term trend down. Sometimes you miss, a lot of people get upset. I took the trade off early. God, why didn't I keep it on? This kind of keeps me in the game on the long term, scaling down into lower term time frames and kind of letting those lower term time frames regulate the trade. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We're going to start our currency machine here. And let me get it going. Okay. Euro. All right. So talked about the breakout point 114.25, 114.64. Looks like we're kind of coming back into this. Obviously, dollar ramping up a little bit. Nothing on the long term to be worried about. That long term trade on the dollar short being still in force though. But the euro's giving you finally a pullback here. 114.25. That's the daily unfair high. The weekly 114.65. Let me pull that up in the scanner really quick. Go into the Forex section. Hit the euro, which is right there. Getting near the top of the profile on the weekly, that 114.65. Here's the level of the market. There's that 114.65. Then you got the kind of the backup defense right there. So that's going to be a collection area in my opinion. And you probably will have the dollar giving that new profile, new unfair highs, giving you that resistance point and some kind of relativity to this euro support area. Again, a roadmap to operate. Not a guarantee, but again, trying to play the odds there. Let's go back into the charts a little bit here. Aussie dollar, man, ooh, ouch. This 75, 77, 78 was that daily situation that we broke through yesterday. You got the biggest massive support now this week. New unfair low. I was actually surprised this didn't react a lot earlier than this. But now you're kind of back to the long-term support area. And if you get a weekly close below here, we're going to have some issues with this. But 74.81 now, and we're trading about 74.84 now. So I think, yesterday had a chance to pick an intermediate support situation, 75, 77, 78. Now you've got long-term support, just like the notes, just like a lot of other things we've looked at. Yellow peel back, explore the whole fair auction. Might have a trading opportunity here on the Aussie dollar with a chance to play defense below. Get some things out of the way here so I can see. Okay. So that's the deal in the Aussie dollar. Canadian dollar, 127.28. Now, okay, so what are we doing? Just kind of stepping back, looking at the Canadian dollar. We had this yellow peel back starting to happen there yesterday, and it's following through without question. So the short trade should kind of be off right now. You've actually broken above daily profiles. You had a chance yesterday to kind of look at this possibly as a selling point, but with that yellow peel back happening in the weekly, you knew that that was okay. Wow, the long-term short trade now has got to just be put on hold for a second. I'm not saying you need to be buying this support here at 127.28. I think you don't have any leverage on this trade right now. This is all in the scanner also. I think it's time to sit on the sidelines of the Canadian dollar. You've got crude oil that may pull back a little bit more here. Remember, 42.06, 42.90 something was that kind of collection area on crude oil. If that's going to kind of relax a little bit more, the Canadian dollar could actually rally up into 129.73. That would be the place, in my opinion, to just kind of whack it again. And that's going to be a big inflection point to pay attention to now. We hadn't talked about this much, the ruble. And again, this was one of those things portending the oil trade to turn around, was the Canadian dollar and ruble kind of starting this kind of action. And now you've got the 69.03 as major resistance on this, and that's again to evaluate the Russian ruble. It's kind of an opposite situation here. All right. And the yen. So Joey and I yesterday, and we talked about this a couple of weeks ago, we talked about the 105, 106 area, just waiting patiently until this thing got down here. And why is that? The guy Andrew, who asked about coffee, we had a hole in the marketplace here. And when the bottom of these holes, going back in the past, there's the 105.44, there's the 106.14. So we talked about just waiting until this thing got down here. And we're going to use Tucker terminology here to kind of back the truck up and then orient some stops below 105. All right. I think even though you don't have a lot going on here with the turnaround situation on the weekly, you've got a new profile happening here on the daily, probably going to happen. You've got a little bit of divergence here on the daily, making new lower lows and Navigator making higher lows. I'm not opposed on a long-term trade with a big high risk reward with targets back at 110.40 to look at this with some stops below 105, because putting on a little weight here with a kind of a big safe landing area when it comes to I got to give this thing a little bit of space to be wrong, but my upside is literally 500 pips north of here. This is the way I'm looking at the yen right now, and I think it's not a bad situation. We've waited patiently. Joey and I talked about it's not even time to nibble on the long side until we get into this area. We're there now, and the risk reward is, in my opinion, 4-to-1 minimum on this trade. How's that sound? All right, we're gonna go back to the scanner really quick. We're gonna take a look at some stocks. Excuse me. We talked about Apple. Again, the long term I don't think is in danger whatsoever on the short side, but you've got a chance to possibly sell this thing a little bit higher now. Should have taken off some weight on the short side already. We're going to look at the ETFs. We're going to look at some of these oil stocks. This is a daily ranking system. Correct. Somebody's pointing out in the den that this long yen trade doesn't mean the yen's going to become valued as the chart may go up. The yen is this cross, the way we're portraying it on the chart is the yen's getting more valued as it goes down. So if we get a bounce here from 105 general area up into 110, that means the yen will become devalued relative to the dollar. But thank you for pointing that out. A couple of stocks we were kind of looking at lately, the SWNs of the world. Where's the other one? Oh, I'm losing my mind here. HP, we just want to see how these things have kind of acted. There's Murphy Oil. We're going to come back and look at a couple of these XLE stocks, guys, and see where there's any support on them. and we're trying to pick out some long opportunities again relative to crude possibly coming down and finding support at the same time. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Taking a look at some oil stocks, considering that oil might be coming into the support area pretty soon. Not there yet. This is kind of a wait and see on oil, but preparing yourself for a possible oil bounce. You know, here's our little buddy SWN. Here's the weekly. No new profiles are even attempting to appear on this thing. Why did I close that out? Here's a daily. You do have support on this around 1146 now. The 4 hours we obviously, 4 hour, 240 minute. We broke down yesterday. That's a little bit of a trailing stop, as you know. We've talked about that a lot. I'm going to go to SWN on the futures server, and you guys get to see real-time quotes for free on the futures. Wait a minute. Oh, SWN. Here we go. All right, so there's, I like this a lot, actually, because there's no new hints of a profile attempting to appear in the long term on SWN. And 1146, big-time support there. Let's see where we're trading this. Looks like Have we opened? Yeah, around $12. Not quite there yet, but it might not be a bad collection area for this. 240s did break down a little bit, but you're coming into that long-term inflection or intermediate inflection point. That's so important. And oil is, kind of drifting back a little bit off the 45, 46s, and it's a nice little setup here. Now, as we look at the scanner, I'm going to show you one thing that is not very attractive to me, but it's showing green weekly, green daily. Could be a turn of events here, but looking at ESV, let's look at this in E-signal. Sorry about that. ESV. Okay, so as you can see here, hasn't really knocked the skin off the ball when it comes to the bounces in oil that should have dragged a lot of these stocks up, and ESV has really not been participating that well. You got unfair highs at 1064 on the weekly, and to be honest with you, it was kind of showing no divergence on Navigator, lower lows. There's something wrong with this thing, and the daily still looking like that, but if you're going to play around with this, you've got a great chance to play defense below this 1025 general area. But again, I don't think this particular stock on a relative scale has acted that well. Therefore, factoring in that kind of crude oil situation, the XLE in general, this stock has underperformed the XLE, even though it's trading above profiles. Probably one you want to stay away from on the long side, all things considered, based on what I just said. Looking across the board, I think we were also kind of looking at, what was the other ones? Oh, HP. Taking a look at this one. Stop out on this one. This has been a nice little stock to trade. Here's the weekly. Has pretty much coincided with the XLE, but right now this is, again, yesterday kind of broke the regulation of the trade up. I like the XLE still. On the whole, I like where it's at as a sector, going back to the sector chart. And here's where we're out in the XLE, kind of somewhat similar to that oil trade as we talked about before. Guys, you've been great. If you hadn't signed up, remember Andy's first of his 4 events are starting tonight. Go to the TFNN site and grab it if you can. And I'm going to attend. I'll see you there. We'll pick it back up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.